Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if this company is actually making money or if it's just playing dress up. Today we're diving into Qualigen Therapeutics and what they've been up to recently. It looks like they've made some significant financial moves, specifically with a company called Marizyme, and we're going to unpack what that means for Qualigen. We'll also touch upon some other key financial events they've reported, so stick around. And hey, if you love getting straight up insights from these dense corporate filings, make sure you're subscribed. We also have a fantastic Discord community linked in the description, so come join the conversation there. So what's the big news? Qualigen announced they've entered into an amended and restated secured demand promissory note with Marizyme Inc. Now, what does that actually mean in plain English? Think of it like this. Qualigen had a loan agreement with Marizyme and they've just rewritten and updated that whole deal. This new note, the amended note, takes the place of an older one from July 2024. Let's get to the numbers. This new note has a principal balance of over $4.4 million. That's a pretty big chunk of change. Where did this number come from? Well, it includes what Marizyme still owed on the old note, plus any missed interest payments, and get this, an additional advance of $216,000. Get this, an additional advance of $216,000. And get this, an additional advance of $216,000 that Qualigen gave to Marizyme on the very day they signed this new deal. It seems like Qualigen is not only restructuring their past lending, but also injecting more cash. Now let's talk about the interest. This note is carrying a hefty 18% interest rate per year. That's quite high, suggesting a potentially risky situation, or maybe just a strong demand for cash from Marizyme. The whole amount, principal, and all that interest is due in one big payment on August 21, 2026. That's about a year from when they signed this. Here's an interesting wrinkle though. Qualigen has agreed to hold off on demanding payment for a full 365 days, as long as Marizyme doesn't mess up. But if Marizyme defaults on this agreement, meaning they fail to meet their obligations, the interest rate jumps by an additional 5% per year. So if things go south, it could get even more expensive for Marizyme and more profitable for Qualigen. To back up this loan, Marizyme has also given Qualigen a security interest in basically all of its assets. This means if Marizyme can't pay back the loan, Qualigen has the right to seize Marizyme's assets, things like their accounts, equipment, intellectual property, basically everything they own. This is called a security agreement, and for Qualigen, it's a way to protect their investment. Now, let's shift gears a little and look at something else Qualigen has been doing. Back in July, they had a private placement where they sold shares of their Series A3 preferred stock. They sold 4,500 shares at $1,000 each, bringing in about $4.5 million in gross proceeds. After fees and expenses, they netted around $4.2 million. This is important because it shows Qualigen is also actively raising capital itself, likely to fund its operations and investments like the one with Marizyme. They've also provided a pro forma balance sheet as of June 30, 2025. This is like a hypothetical financial snapshot showing what their financial situation would look like if these recent events, namely the private placement and the deal with Marizyme, had already happened by that date. Qualigen states they believe this pro forma balance sheet accurately reflects their position. Companies use pro forma statements to give investors a clearer picture of how major transactions would impact their financials, sort of like looking into a crystal ball for their finances. And as of the date of this report, Qualigen estimates its total shareholders' equity to be over $2.5 million. Shareholders' equity is essentially what the owner's stake in the company is worth, after all debts are paid. This figure is a key indicator of a company's financial health. So let's recap the big deal with Marizyme. Qualigen is essentially lending a significant amount of money, over $4.4 million, at a high interest rate of 18%, with the entire sum due in a year. They've secured this loan with Marizyme's assets, giving them a strong claim if things go south. Qualigen also just raised a good chunk of cash themselves, which helps explain their ability to make these kinds of advances in investments. Looking at the signatures, Kevin Richardson Tech has signed off on this report as Interim Chief Executive Officer for Qualigen Therapeutics, Inc. Now let's zoom out and think about what this all means for Qualigen. On one hand, they're actively managing their finances, raising capital and making strategic investments or loans, like the one with Marizyme. The high interest rate on the Marizyme note suggests they are either looking for attractive returns on their capital or see Marizyme as a company with some financial challenges that require such terms. Securing the loan with all of Marizyme's assets is a strong move to protect Qualigen's investment. Selling their own preferred stock also shows a proactive approach to funding their business. However, there are always risks to consider. The large amount lent to Marizyme, coupled with the high interest rate and the 1-year payoff period, could indicate potential instability in Marizyme's operations. If Marizyme defaults, Qualigen might have to go through the process of seizing assets, which can be complex and time-consuming. Also, while Qualigen raised capital, the overall financial health and profitability for Qualigen itself aren't detailed in this specific report, which focuses more on a specific transaction. We'd need to look at their broader financial statements to get a full picture of their performance. The direction Qualigen seems to be taking is one of active financial management and potentially supportive or strategic lending to other companies, while ensuring their own funding is secure. The key opportunity here is the potential for a significant return on the capital provided to Marizyme, especially if Marizyme thrives and repays the loan. The main risk is Marizyme's ability to repay, which could lead to asset recovery efforts for Qualigen. In conclusion, Qualigen Therapeutics appears to be navigating a dynamic financial landscape, making moves to bolster its cash position and engage in significant lending activities. The success of the Marizyme deal will be a critical factor to watch. Alright, that's our breakdown of Qualigen's recent filings. What's your take on these numbers and what they signal for the company's future? Do you think their lending strategy is a smart move? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, and we'll see you next time.